I'm Nancy Puder, and I'm the founder of Seacoast Seniors and also a realtor at Keller Williams Realty in Pismo Beach. Zoe Raithel, who is an expert on reverse mortgages. For the past 17 years, Zoe has been the go-to mortgage lender on the Central Coast for those looking for for those looking for what she likes to call AAA service. Zoe is also one of our Seacoast Seniors generous sponsors. So thank you, Zoe, for being here today.
Thank you, Nancy.
So Zoe, please help our listeners understand how reverse mortgages are different today than they were, say, 10 or 15 years ago.
Sure, absolutely. And thanks again for having me. Yes, a lot of people heard the stories about seniors who may have lost their homes who had a reverse mortgage in the past, the story about losing your home to the bank. And, you know, believe it or not, reverse mortgages have been around since the early 60s. And they progressed year by year. And in the 80s, they became insured by the federal government. And the stories that you've heard about the potential for risk for the seniors have really been minimized over time. So the stories that you've heard about the banks taking the home were really related to a few items. One being that you do still need to maintain paying your property taxes and your homeowner's insurance. And number two, you need to maintain the property itself. And so the original reverse mortgages allowed, well, they do today as well, they allow seniors to tap equity in their home to meet their financial needs. And so the seniors were not necessarily as limited many years ago with how much money they could take out, as well as how soon they could take it out in the process. So what we were finding were that seniors were taking a number of, the dollars they were taking out in equity was quite a bit at the beginning. They would spend it, and then they wouldn't have the money any longer for taxes and insurance to keep the property paid up. And so at that time, it became necessary for them to potentially sell the home. And then when they were wanting to sell the home, potentially at that given moment in time, the house might not be worth what they owed. So these were the stories that were happening. And so when the federal government, through Housing and Urban Development, FHA, took over insuring the reverse mortgages, over time, they've become extremely safe. And here are some ways that all of those problems we had in the past are minimized today. One of them is that, first of all, we conduct a financial assessment to make sure that the senior that's in the home is able to maintain through either through the proceeds from the sale, this reverse mortgage, or through pension or Social Security. They have a form of paying their property taxes and insurance on a go-forward basis. So we make sure they actually are able to manage not only their taxes and insurance, but also the other costs of maintaining a home. So financial assessment first to make sure that the senior, this will be a good match for them. Number two, with the government insurance, the FHA, we now have loans that are called non-recourse. Non-recourse loans means that the lender cannot make the heirs pay more for the house than it's worth. So you will never owe more than the house is worth today. That is the insurance that you're getting through the federal government. Number three, this is not necessarily completely a complicated loan product, but there are some different, obviously moving parts to a reverse mortgage. So now there is also a requirement for counseling, not only through a mortgage advisor such as myself, but also through third-party HUD counseling, Housing and Urban Development. You will be able to choose a housing counselor to help you with these decisions. So a variety of ways to make sure that the homeowner can stay in their home for as long as they want to, the rest of their life, without making any mortgage payments, but having these kind of safety valves in place now to make sure that they are safe on a go-forward basis.
Thank you, Zoe. So would you say that reverse mortgages are for everyone?
Absolutely not. First of all, reverse mortgages are for seniors 62 and older that want to live in their home, their primary residence for, a continuing period, aging in place, so to speak. And so those people, those seniors, may have many options to help enhance their retirement. They could sell the home and downsize. They could access other funds through investments. They could, bring in renters to help with financial needs. There's a variety of ways that seniors can help make their retirement a better future for themselves. And so it's not necessarily that a reverse mortgage would be a perfect match for everybody, but that's why it's good to start asking the questions and seeing what options you do have.
Good. Well, do you think you could give me a scenario where a reverse mortgage would be a useful tool for someone age 62 or older?
Sure, absolutely. So, well, currently, I'll tell you a couple of clients I've worked with just recently. Currently, I'm working with a client. She's a very young and vibrant 72-year-old, and she was most recently working in a gallery on the Monterey Peninsula. But because of COVID, the gallery closed. She was using this income actually very successfully to supplement her retirement income. And now she's found that even post-COVID, the gallery's not going to open up again. So now we're kind of in this position where she's been paying her mortgage all these years. She's got a huge amount of equity, but not that other income any longer to supplement her retirement to help make her, make her mortgage payment to pay her other bills. And so her options are, being in her early 70s now, go beat the streets and find another job. And does she really even want to work that much anymore? So the consideration there is this is a great option for her to help supplement her retirement income because it is her savings. It's just in the house. It's her nest egg and it happens to be in her house. That is, believe it or not, at retirement, that is our 83% of the net worth of most people at retirement is in their home, not in an investment account. So it's a good way to access that. But I also like reverse mortgages for purchases. I actually helped a client last year. They were in their 80s. They wanted to downsize. They lived up here in North County and they wanted to downsize they were on, I think, about a 5-acre parcel and just not really wanting to, or possible to take care of that much property anymore. They were about to net about $400,000 from the sale of the home. But that $400,000 would not have bought the home they wanted for their needs for the rest of their life. And so what we were able to do is actually purchase the home they wanted. I think the sales price was $600,000. Use the money from the proceeds, and then the remainder was on the reverse mortgage, so they have no monthly payments for the rest of their life. They were able to get into a home that they absolutely love, single level, no 5 acres. That's a great match for them on a go-forward basis. So just a variety of, whether it's a want or a need, supplementing. And then there's even stories of people that are having some health issues and want to maybe bring somebody into the home to help with their home care. And that can be very expensive depending on the level of care that you want. And so again, if this is your nest egg and you've got that large amount of equity in it, it may be an option for you to tap that through a reverse mortgage and then not have the burden of having a mortgage payment and be able to live the life that you want to.
Good. So do both, if you have a husband, excuse me, if you have a husband and wife, do they both have to be age 62 in order to qualify?
No, well, not on the loan. So in other words, anybody on the reverse mortgage loan needs to be 62 or older. But if we had a younger spouse, they would just not be on our loan. What's nice about the insured loan is that it allows the surviving spouse to assume not always this way, but if the younger spouse who was not on our reverse mortgage, the older spouse passes away, the younger spouse, even though they were not on the loan, they are allowed to live in the property for the rest of their life as well.
Okay, so that's good to know.
Yeah.
So I think we all know that there's no free rides. So would you say that a reverse mortgage is free money?
Absolutely. not free. Just like every mortgage, there is an interest rate, and that interest accrues on the balance. And so the difference is that on a traditional, conventional forward mortgage, what we might all be familiar with, the interest is paid monthly through the mortgage payment. And that's a forward mortgage, and the balance goes down. On a reverse mortgage, the same is true. Interest is accruing, but you're not making a mortgage payment every month. So on a reverse mortgage, your loan balance goes up. And so over time, your loan balance goes up, but you don't have that mortgage payment every month. So it's absolutely not free, but it is accessing the funds that you've already saved for yourself within the equity of your home.
All right, so give me a reverse mortgage.
You froze up for just a minute. What was the question? I'm sorry.
I was asking you to just list a couple of pros and cons to getting a reverse mortgage.
Yeah. So pros, of course, would be that you have the flexibility to be able to access the equity in your home for your needs. And the flexibility includes things like getting a lump sum at closing. It also includes having monthly checks. You can supplement your income in that way. And it also includes the flexibility of having a line of credit so that you can access in the future. So there's a huge amount of flexibility in the loan product. That's a pro. The obviously not making a monthly payment is a pro. And then just having options for your retirement that are your selection. So those are all definitely pros to being able to have a reverse mortgage. I guess a con might be in the fear that a lot of seniors have is that my loan balance is going up. We just talked about that. So does that mean my heirs may not get any inheritance? And that's definitely a family discussion. And as your balance does go up, it's a potential that your excuse me a minute, just had a pop-up come up there. Your balance would go up over time, but that doesn't necessarily mean that the inheritance would be significantly less, because as I know, I do not have a crystal ball, so I can't tell you for sure. But as we see historically, values go up on homes, and sometimes they're faster, higher each year, sometimes they're lower. Very few times they go down quite a bit. But if you drew a line over the last 40 or 50 years, remember that property values go up as well. So it can be, and in our proposals that we work on for our clients, we show, well, what if we had this loan balance that was going up over time? What does that actually do to the equity position? So in other words, the inheritance that's left over. How much the difference between the equity is the difference between the value of your home and how much you owe on it. And so over time, while what you owe on it goes up, often is the case that the value goes up as well. So you'll see that while it might affect your inheritance, how much money is left over after you pass, it may be limited because of that idea that values do go up, appreciation occurs. And then I guess the only other con would be, and a consideration that we also look at on proposals, is that there are costs. I mean, if you're going to do any kind of real estate transaction, financial, there would be closing costs. They're traditional in the sense of escrow and title fees, but there is the government insurance fee, and that can add to the cost of your loan. Now, these are not necessarily out-of-pocket costs. You don't necessarily have to write a check for them. But they are included in the overall picture of the proposal. So there's some closing costs involved. So that's why we look at it kind of the entire, globally, your entire picture, and making sure that this is the best loan product for you.
Well, Zoe, I want to thank you for being so thorough and helping us to understand how reverse mortgages work in today's marketplace. To contact Zoe for a free consultation, you can call 805-400-8585. And I just want to thank you again, Zoe, for being with us today. You're always such a pleasure to work with. Everyone, go out there and make it a great day.